Big news for SoFi as they get approval for a bank charter. Obviously, the stock itself loves the news with it shooting up over the past couple of days, but I do want to talk about my opinion on this news, give it a little flavor, and why this is pretty big for them long term. So why is this good news for SoFi? Well, to start, it should help their earnings through a couple ways, specifically around lower cost of capital. They also are going to have a net interest margin. Because we're in a rising interest rate environment, becoming a bank will end up helping. The CEO of the company also had some words around this announcement and how it can help their company.
SoFi money will go from an account that we partner with a bank on to our own SoFi checking and savings account. So we'll be able to give a high interest rate on checking, higher than anyone else gives.
Now, this is important because right now with normal banks, you get 0%. It sucks. It's the worst interest rate. So anything above that obviously is winning.
We'll be able to do that with no fees. We'll be able to provide overdraft protection, the ability to pay with your phone, pay with your card, pay your friends person to person. We would just ask you to do direct deposit with us against that backdrop.
See how he mentioned the direct deposit? If people aren't using their bank, then they're not able to use all these perks of becoming a bank.
The bank license allows us to fund our costs at about 50% lower, and we're going to use that to give the consumer a highly differentiated interest rate in SoFi checking, about 1%.
1% is honestly pretty good, especially for a checking account. I'm used to Ally and a high yield savings account. If we're just talking about checking, that is extremely high.
And that's actually being funded by our lower cost in funding our loans. Since we no longer have to borrow money from big banks to lend to our customers, we can use our own customers' deposits as a result of the banking license.
So they're able to pass on savings to the customer, which I love to see. They're sharing the wealth. Beautiful.
Talking of you being able to make literally hundreds of billions of dollars more now that you're not at the mercy of these banks.
I love how Jim Cramer is trying to squeeze out some insider information with that question. Like, are you guys going to make 200 million or 500 million more? Just a question. So now you see how this announcement can help SoFi from a customer experience perspective. It's a better experience. People may get a higher interest rate for their money that they're actually depositing. And then they also have savings when it comes to costs, and they should be able to increase their revenue. I'm not sure how they're going to deal with the current accounts out there when it comes to checking because they use partner banks, meaning that the money was actually in the partners' banks' accounts and not SoFi. But now that they have their own bank, if they have people direct deposit there, then they can use that money, give out loans, and basically make a margin on the spread between paying out 1% and loaning it out at 4%. On top of this announcement, their last quarterly report was pretty good when it comes to earnings in terms of member growth, their product growth, everything across the board was pretty much growing. I didn't come up with a discount cash flow model myself, but if we look at Finbox before this announcement, they had the fair value around $15. As for Wall Street analysts, they have a price target of around $21 for a year out. I do have some skin in the game when it comes to SoFi. I sold a put around the last earnings when I was trading closer to around that $20 level. I ended up getting assigned 100 shares after selling that put, ended up reducing my cost basis by selling a call. With it going back closer to $16, I may be able to roll this out further in time and reduce my cost basis even more, but I'm looking to continue to sell calls around that $20 level. It's also interesting because with this move, SoFi is becoming more like one of my other favorite financial stocks in Ally, because that is a fully digital bank and SoFi is essentially that as well now. The major difference between the two I see is that SoFi is being valued like a growth company because it is growing at a faster pace, while Ally trades more like a value stock with a PE ratio that's only around 6. So if I had to choose one or the other right now, gun to my head, I'd probably say Ally just because it's a little bit more conservative. But this move with SoFi getting their bank charter, becoming a financial stock and a fintech stock is definitely interesting and great news for anyone that is investing in this company. If you did enjoy the video, make sure to hit that like button as well as consider subscribing to Main Street Wolf, where we talk investing, stocks, anything to do with money. Thanks guys for watching and have a great day.